Hello everyone, today is Thursday the 29th of May, and as we approach the end of the month, there is a lot to discuss in today's video. This is the Markets in Minutes, brought to you by PU Prime. Yesterday, the U.S. Court of International Trade stopped the high tariffs that Donald Trump had placed on many countries back in April. Trump said that the tariffs were meant to fix ongoing trade imbalances. Usually, such tariffs should have the Congress's approval. However, Trump managed to skip that step by declaring a national economic emergency using an old law called the International Emergency Economic Powers Act, or the IEEPA. In the rule yesterday, the court disagreed with this move, saying that the tariffs went beyond what the law allows the president to do. Kindly note that any other tariffs imposed under any other law or section of the law other than this emergency act remain in place. So basically, not all tariffs were cancelled yesterday. Adding to yesterday's events, the Federal Reserve, or the FOMC, released the minutes from its meeting on the 6th and the 7th of May, revealing that basically officials are grappling with the heightened economic uncertainty, primarily due to President Donald Trump's proposed tariffs. While the central bank maintained the federal funds rate in this last meeting at the same current range, which is 4.25% to 4.5%, the minutes indicate that nearly all policymakers expressed concern that inflation could be more persistent than previously expected. The FOMC emphasized a cautious wait-and-see approach, acknowledging the dual risks of rising inflation and increasing unemployment, which complicate further interest rate decisions. Moving on to today's economic agenda, traders are paying close attention to the second estimate of the US GDP for the first quarter of this year. The market basically expects a great decline to a negative 0.3% compared to the 2.4% growth in the previous quarter, which is the fourth quarter of the previous year. This could definitely be a sign that the economy is slowing down. Moreover, the jobless claims are also in focus, with the initial claims expected to be around 229,000, while the continuing claims to be around the 1.89 million mark. These numbers will help show how the job market is doing most recently. And in addition to that, the crude oil inventories are expected to increase by about 1 million barrels. Any surprise in the data could lead to quick moves in oil prices and markets. That's all for today's market update. Stay tuned to PU Prime for more insights. Have a great trading day.